Let's talk about federal government savings bonds under the following category. Follow, like, share, and let's get into this. We'll be taking a look at federal government savings bonds under why you should invest in federal government savings bonds. Who should invest? You want to know if this particular investment is okay for you. You want to know who should avoid it. If you as a person, you should avoid it, taking certain things into consideration. The requirements that you need to get started so that you can get it ready. The step-by-step guide. I'm going to be taking you on the step-by-step guide on how to start investing in FGN Savings Bonds. And I'm going to be showing you how your interest is going to be calculated. So come with me. First of all, what is federal government savings bonds? Federal government savings bonds are debt instruments that the government uses to raise funds for the sake of executing the project or certain expenditures. To keep it simple, it's just the government borrowing from the public, using it for a project, and paying them back with certain interest. So it's a win-win. The government gets the money from you, they use it for a project, you lend the government the money, and you get an interest on it. Beautiful, isn't it? So why should you invest in federal government savings bonds? The first one is, with federal government savings bonds, your money is totally safe. It's a low risk investment and your money is totally safe with the government because it is backed up by the full faith of the federal government. So you don't get to lose your money at all. You will definitely get your money back and you definitely get your interest. So federal government savings bond is a very safe form of investment. Another one is you can do it yourself. You don't need to give your money to another individual to do this for you. This is something you can do on your own. So you don't get scammed. You can do it yourself. So this is another reason why you should start investing in federal government savings bonds. Another one is you have a regular cash flow. So when you invest in federal government savings bonds, your interest is going to be paid. And this interest is going to be divided into four. Say for instance, you are investing 10 million and the government is supposed to return 1.8 or 1.9 million naira. This 1.9 million naira is going to be divided by 4. And the first one is going to be paid 3 months after, the next one 6 months after, the next one 9 months after, and the last one a year after, together with the capital that you have invested. So this serves as a form of cash flow for you. And if you want this interest to come in on a monthly basis, all you need to do is just invest 3 months consecutively. For instance, if you're investing, say February, you invest February, March, and April. This guarantees you to get interest every month for the next 2 to 3 years, depending on the tenure you are choosing. So with this, you have a constant cash flow rather than having your money in the bank and it's not generating anything for you. Another one is low entry. With as little as 5,000 naira, you can start investing in for federal government savings bonds. So which means that if you have 5,000 naira, you can start and you can continue to increase whatever you have in this investment as time goes on. Another one is that it is tax free. You don't get to pay tax on the interest that the government is paying back to you, and it can be used as a collateral. So the bank can use it as a collateral. If you want to get a loan from the bank, it can be used as a collateral in the bank. Another one is liquidity. Unlike real estate, where if you buy a property and you want to sell back on time, you may need to sell on the distress depending on the location. With federal government savings bonds, you can liquidate your investments in a very short period of time. So it's highly liquid. You can get your money back if you cannot wait till the end of the tenure. And another one is it is good for savings for retirement. So if you're already planning for your future and you're already planning for your retirement, you can begin to put something into federal government savings bonds. Or you're planning for a project, probably you want to build a house, you want to buy a car, you're planning for your wedding, you can begin to put something gradually inside your federal government savings bonds so that it can generate certain interest for you towards the time you finally need the money. Please take note that federal government savings bond is a monthly investment and is usually held every first Monday of the month. So if you miss federal government savings bond for 1 month, you can prepare yourself for the following month, the first Monday, and it opens for a period of about 5 days. So it's usually from Monday till Friday. That's the first Monday of every month. You have the opportunity to invest in federal government savings bonds. So what do you need to start investing in federal government savings bonds? Let's get into it. To start investing in federal government savings bonds, here are the things you'll be needing. The first one is you must be a Nigerian not less than 18 years of age. However, if you're a minor, it doesn't mean that you'll not be able to invest in the FGN Savings Bonds. But if you have to do this, you need to go through your guardian or your parents because their information will also be needed to help you start this kind of investment. Another one is that you must have a minimum of 5,000 naira. Now, that is if you are investing on the primary market. In FGN Savings Bonds, we have the primary market and we have the secondary market. In the primary market, you need a minimum of 50 million naira. But on the primary market, you need a minimum of 5,000 naira and a maximum of 50 million naira. So with as little as 5,000 naira, you can start investing in federal government savings bonds, and you can continue to increase your investments as time goes on, but at least you can get started with this. Another thing you'll be needing is a national ID card. So your national ID card can be your NIN, it can be your international passport, it can be your driver's license. Any valid ID card will do. Another one is your utility bill, so either a waste management bill or a PACN bill. Then your KYC. KYC simply means know your customer. So they want to know you, your name, your age, your address, your telephone number, your signature, those personal details about you. They want to know it about you. That's your KYC. Then you have your CSCS accounts. CSCS just means Central Security Clearing System. So this is just like having an account number with a stockbroker. So that with this number, it is used to identify that this particular account belongs to you. And if you don't have a CSCS account already, you don't need to worry. Once you have a stockbroker, your stockbroker is going to generate your CSCS account for you and you'll be ready to invest. And finally, a stockbroker. Of course, before you can have a CSCS account, you need a stockbroker. So all you need to get started is have a stockbroker, get registered with them, and when you are registered, your journey to investing in federal government savings bonds is started. I'm going to be showing you step by step on how to get started with your federal government savings bonds with your broker. But before we go into that, let me take you through that journey to know if federal government savings bonds is for you or if federal government savings bond is not for you. So let's get into that. So should you invest in federal government savings bonds or you should not invest in federal government savings bonds? Let's find out. Invest in federal government savings bonds if your risk tolerance is low. If you know you are the type that you don't like to make any loss on your investments, you know that a loss on your investments can land you on the hospital bed with drips in your body, then don't go for a higher risk, higher reward investment. Just stick to a lower risk, lower reward investment. And with federal government savings bond, it's a low risk investment. You don't get to lose your money, your capital is secured, and your interest is definitely guaranteed. So if you know that you cannot tolerate a loss on your investments, please stick to federal government savings bonds. But if you know that you can tolerate a risk on your investments, that you would rather go for a high risk, high reward investment, then you can attempt other forms of investment. For instance, if you are investing in stocks, if you are investing in cryptocurrency, you know that that is a high risk, high reward. You either gain on a high rate or you lose on a high rate, but you must be able to tolerate the loss if it comes. It is safe and secured, and your interest is definitely guaranteed. So I think when I was explaining this, I've explained a little of this. So it's a safe form of investment, it's secured, and your interest is guaranteed. So if you know that you prefer certainty to uncertainty, you prefer a fixed income, to know that what I'm getting at the end of the year is 20%, what I'm getting at the end of the year is 25%. You know you want certainty, then FGN Savings Bonds is for you. But if you are the type that you know that you can still juggle between any rates, it could be low, it could be high, then you can go for other forms of investments. There are high risk investments that when you invest in them, you can have up to 100% on your return or even more than. And at the same time, if you are not careful, you can have less than what you have put into the investment and you can make a loss on the investment. You know you are the type that you rather go for high risk, high reward investments, then federal government savings bond is not for you. But if you prefer certainty, federal government savings bonds is for you. Another one is ignorance investor. If you know that you don't have a knowledge of investment already, that you are still a novice when it comes to investments, you want to stick to something that is simple and will not lose your money while you learn on the other forms of investments. While you are learning, stick to a safe and secure form of investments, which is FGN bonds and others I'm still going to be talking about in my video. So if you are not following already, follow, like, share, so that we can get more people to hear about this. If you are an ignorant investor, if you are a novice, stick to federal government savings bonds. Because if you make a loss on your investments, it could be frustrating and you may not want to continue to invest. So stick to a simple investment while you are gaining knowledge on other forms of investments. And if you know that you're a knowledgeable investor, then you can go for other forms of investment. For example, when it comes to stocks, I have a large portion of my investments in stocks and is doing very well. Another one is inflation. Federal government savings bonds cannot hedge against inflation. Currently, inflation is about 34% in Nigeria as I speak, and federal government savings bonds cannot hedge against that 34% inflation. What federal government savings bond can give you at the end of the year is 21%, and that is if you reinvest the interest that is coming to you quarterly. Then you can have about 21% on your capital, which cannot hedge against inflation. But which will you rather choose? 5% per annum in your savings accounts or 20% in FGN Savings Bonds? Which will you rather choose? So you understand what I'm saying now. But if you know that you want all your investments to hedge against inflation and you have the knowledge of what to do to make it hedge against inflation, then you can go for other forms of investments. You may not go for federal government savings bonds. And lastly, I have here that if you know that you can afford to wait for up to 2 to 3 years, because federal government savings bonds usually have a tenure of 2 to 3 years. If you know that you can wait to maturity of 2 years or 3 years, then you can stick with federal government savings bonds. Don't forget that you continue to get your interest quarterly every 3 months. So you get inflow of cash. But if you know that you cannot wait your maturity, you want to stick to other forms of investments that you can easily liquidate within a short period of time. Because if you liquidate your investments before the maturity, you tend to lose certain amounts on your interest, not on your capital. So with this, you know if you should invest in federal government savings bonds or you should not invest in federal government savings bonds. So the next thing I'm going to be showing you is a step-by-step way how to register with your stockbroker and how to start this investment journey. See you in the next slide. Like I said, as to get started with federal government savings bond, the very first thing you need is a broker. So let's take a look at some of the suggested brokers we have behind me. Number one, we have Atlas Portfolio. You can register with Atlas Portfolio to get started with your federal government savings bond. You can register with Meristem. They are also a stockbroker. You can use Stanbic IBTC or FBN Quest. Now, these are apps that you can find on your Play Store or your Apple Store. However, to get started with federal government savings bonds with either Stanbic IBTC or First Bank of Nigeria, I would advise that you just walk straight into the bank, go to the asset management section and tell them you want to get started with federal government savings bonds, and you'll be directed on what to do. But still download their app at the same time. And another app you can use is Invest Niger. So you can just go to Apple Store or Play Store, download Invest Niger if you don't want to go through the stress of entering into a bank. Download this app, fill in the necessary details as we have in the requirements. Your CSCS and your CHN accounts will be generated for you, and fund your accounts and your investing journey has started. And if you already have a stockbroker, you can make do with your own stockbroker to get started with your FGN Savings Bonds with them. Now let's take a look at federal government savings bonds and how the interest is calculated. The February 2025 federal government savings bonds, the 2-year tenor will generate 17.799%, and that of 3-year tenor will generate 18.799% per annum. This is yearly. This is not just for the 2 years. So it means you get this percentage for the first year, for the second year, and also for the third year. And this interest is going to be paid quarterly. Now let me show you quickly how this interest will be paid quarterly. So let's say you're investing 1 million naira in the federal government savings bond with just this 2-year tenor. What is going to happen is that you're going to multiply your 1 million naira by this percentage. So for the first year, you have 177,990. So how is this 177,990 paid? Your 177,990 will be paid 4 times, which is quarterly in a year. So if you started February, you're going to calculate March, April, May, which means your first interest is going to come in by May, the next one being August, November, and the next one being February 2026. So that is how you're going to be paid. And it's going to be divided by 4, and each one, which means a total sum of 44,497 naira is going to be paid to you 4 times in a year, and this is going to continue for the next 2 years, which means you are going to get this amount for the next 8 years if you are going for the 2-year tenor. Now the beautiful thing about this federal government savings bond is that once this your 44,497.5 naira comes in, you can reinvest these amounts either in federal government savings bonds or in another investment, which will also generate another interest for you. So your interest can work for you even while your capital is still working for you. I hope now you understand how to calculate your interest in the federal government savings bonds.